All right, everybody. I want to make sure that you guys can hear us, and that there's no feedback on the line. Can Trish respond to Ian, please? We're going to keep continuing on. Okay. Thank you. All right. Well, everybody, welcome to the 2021 shareholder meeting. Even though it is in 2022, this constitutes our 2021 shareholder meeting. We purposely do it this time of year to allow the whole year to pass to talk about 2021. So while some of the things on the agenda will move into 2022, we want to thank everybody for attending this year's meeting. And I just want to introduce everybody. We have myself, Kent Wilson, CEO and President, Charlie Winters, our Chairman of the Board, Shannon Rigney, she'll be moderating some of the questions, but she's our Vice President of Social Media, and Jerry Garcia, she is also a director on our Board of Directors. So we'll start the meeting with a little bit of an agenda. There we go. Okay. The agenda for the meeting, we're going to call the meeting to order, which will review the voting measures. We will also confirm the vote. I will then do a review on 2021 and 2022, and then we'll open it up to some questions that we've received from shareholders, and Shannon will kind of moderate those questions for us. So I formally call the meeting to order for our 2021 annual shareholder meeting. Charlie, as Chairman of the Board, would you read how the measures have passed and if we have a quorum?
Yes, we do have a quorum. The current board members passed at 97%. To retain Malone and Bailey as our accounting, passed at 99%. To authorize the increase in shares, passed at 86%. And the equity incentive plan passed at 89%.
Okay. We formally accept and will file these changes with the state of Delaware and also notify the SEC. I want to also say thank you to the shareholders for your vote of confidence in management and the directors, and also our aspirations to reward our shareholders with our incentive plans, and also to look at for the future of this company as we might need to raise capital with the increase of our shares. It's very important to note from management, we do treat the raising of capital and issuing shares very importantly. It's not something we take lightly, and I want you to hear it from me directly that we do that with care. So we'll start with a little bit of 2021. I got to start with what an amazing year it was. And I get feedback from a lot of shareholders on some of the excitement that they've had over it, but also some of their concerns. And I want to talk about what that really means for us as a company and what we accomplished. In 2021, we really laid the foundation for success. 2020 and prior to that, we really were a very different company. But if you look at what we accomplished in 2021, it set us up for doing business in a very unique way that will have benefits over the next 20 years. So let me give you an example of that. We acquired 6 companies in 2021, starting with Vayu. Even though it was started in late 20, it finalized in January of 2021. We forayed into drone manufacturing and autonomous drones as a service. And we also acquired several companies in contract manufacturing, which have huge industry potential. We did 3D mapping software that has huge implications for governmental work. We accomplished the acquisition of TDI, which is a defense services contractor. And we rounded out the year with 2 very pivotal and important acquisitions. If you'll notice the press release today, the acquisition of ElectJet, while on the surface back in November may have not made a lot of sense, what they have behind the scenes at that company is truly revolutionary and foundational, and opens up this company into a market space that is in the tens of billions of dollars, not hundreds of millions of dollars. Over the next 20 years, we hope to grab a large percentage of that market share, but it will take time and effort and money to do that. So let's talk a little bit about where we headed in 2021 and where it's heading us over the next 1 year, 2 years, 5 years, and 20 years. Let's look at the nutraceutical manufacturing industry. In 2021, a $454 billion industry, and it's expected to grow to $991 billion by 2030. A short 8 years away, it's going to double in size. Why is that? Why is that? As our food supply and other things become less nutrient-based, we're turning to nutraceuticals. We chose to get into this industry, not by accident, not just because it was a company that had a nice dollar revenue and EBITDA to it, but because it is in an industry that is poised for rapid growth, good profit margins, healthy profit margins. And we feel that the acquisition of Alt Labs and its scientific type of base to it allows us to be market leaders as we grow that segment over the next 1 year, 2 year, 5 year, and 20 years. Battery manufacturing. Lithium has recently been called the oil and the gold of the next 10 years. And why is that? Because the economy is switching to electrification. The days of an oil-dominant market are fading. When we chose to get into that industry is because we recognize the need in our own components and products, ranging from things that we produce at QCA to our drones. And so we landed with Sam and his team at ElecJet, and we realized that this is a company that is poised to be a leader in their industry. And we recognize also that lithium has reached its capabilities. It's been a wonderful thing. It's changed our economy over the last 30 years immensely. I mean, we wouldn't have cell phones, we wouldn't have tablets, we wouldn't have computers, and everything that's electrical now pretty much is tied to a lithium battery in some way. So we recognize this market to be huge. We also recognize that it had things that needed to change, and we dove into a company that was at the prefaces of that change. If you look at our press release today, many asked me back in January when we announced our solid-state battery, how is Alpine 4 going to accomplish this? But we knew what we had. We knew we had a battery that truly is revolutionary, that others are trying to make. QuantumScape, Solid Power, and many others have accomplished some level of solid-state batteries. But I think if you read what occurred with our testing at the BIC, they have not seen anything like this. I want you to think about that for a moment, where it's going to take us over the next 20 years. Being a leader, one of the first to market. I can tell you that I'm getting calls every day from several different industries that are looking to utilize this type of battery. So we expect big things over the next 1, 2, 5, and 20 years. It will take us time. I want shareholders to understand that. Don't blow expectations out of proportion, but understand the magnitude of what this company is and what it will do. Our drone company, Vayu Aerospace, a $22 billion market in 2020, expected to grow to $42 billion by 2025. That is an industry ripe for growth. We have airframes that we have developed that are, I would say, revolutionary, that solve many different problems for the market that other drone manufacturers haven't figured out due to flight time. Our patents around it, that the US-1 and eventually US-2, using the airframe as a battery, solve many different problems that the industry can't solve without that patent. And we expect the revenue to grow in that industry quite exponentially over the next 5 to 10 years. That's defense services. I mean, this was an industry we picked up mainly to support, or what we call as a facilitator, but through its contacts with the Department of Defense and Department of State, we knew that there was a relevant need for our products and services. So we picked up a company called TDI, Thermal Dynamics Corporation. And they do, work at our U.S. embassies around the world for the Department of State. But we chose to get them not necessarily because of the industry they're in, but the contacts and the downline they have with our federal government. A very important thing to note as we get into developing, tech in the battery industry, our drones, and many other avenues. So those are the foundational things we did in 2021. And I think it should show our shareholders and our customers and our employees that we really mean business and that we've done the right thing structurally as a company to grab large market share in the future. So that's 2021. Let's talk about some of the highlights. Okay. We acquired 6 acquisitions: Vayu, TTI, Alt Labs, Identified Technologies, ElecJet, and RCA. And it's It's TDI, not DTI. We raised $77 million in the capital market, something that was not really possible in 2020, but we were able to do in 2021. And we did it at what I would say a very cost-conscious way to our equity. We uplisted organically to the NASDAQ. And I hope that shows our shareholders that, we didn't make rash decisions in doing that. We took our time to wait for the share price to rise to an appropriate point, which we knew it would at some point. We didn't reverse our shares. We did it organically, and I think that speaks volumes to the board of directors and our initiative to protect shareholders. Current assets. I mean, this is a remarkable thing, and I think that if you look subjectively and inclusively at our financial statements, I mean, our current assets, which is really cash, AR, and inventory, stuff that turns to cash pretty quickly, grew from $10.6 million to over $44 million in 2021, and it's growing for 2022. We paid down $20.3 million in funded liabilities while building our inventory up to over $6.8 million. Why did we build our inventory up? We needed to do that to be strategic. We are facing 2021, what I would consider a crisis of supply chain. We were able to navigate that pretty well, considering all things. While it didn't really bode favorably for our 2021 financials, it has set us up to be very successful in 2022. Assets grew from $41 million to $138 million in 2021. It's a big number, and I hope you guys can put your mind around how large of an increase that is and how much that means to the structural health of our company. Shareholder equity, this is a great one. Negative $8.8 million in 2020, growing to $72 million in 2021. We filed for 5 different patents in 2021, most of it around our battery tech and our drone tech. Cash invested into acquisitions, $37.3 million. So we didn't just blow through cash from OpEx expenses. A lot of it was reinvested into our acquisitions or for acquisitions. And then finally, we invested $3.6 million into new equipment, keeping us very competitive in the market space. In something that is very important, especially at our subsidiary Quality Circuit Assembly and some of our other ones that need higher tech manufacturing equipment to be able to deliver U.S.-based products and do it efficiently. We're up to 519 employees. That's no easy feat, and we did this during a labor crunch. And I threw a 2020 statistics in here. 95% of our workforce was retained during COVID, at a huge loss to our financial statements in retaining them. But we did this knowing that it would rebound, and it's helping us in 2021 and 2022 during a labor shortage. I can't underestimate how important that was in 2020, not only to do the right thing to keep people employed, and it didn't help us on a financial P&L perspective, but it is helping us now. So let's talk about 2022 and where we're headed. The highlights for 2022. Organic annualized revenue guidance of $122 million for 2022. This excludes new acquisitions. Q1, it will be slightly off that number of if you just broke it into pure quarters. We expect most of our revenue growth in Q2 and Q3, but these are firm numbers, not adding to having any acquisitions. So we're now a $122 million company expected for 2022. We have 2 acquisitions planned. If you've looked at that schedule from last year, we have really pulled back on our acquisition space. We are investing heavily, time-wise, commitment-wise, dollar-wise, into our existing subsidiaries to help build them out, to grow them into all those large markets that we talked about a few slides back. So 2 acquisitions planned. They're very strategic in nature. I can tell you one of them is around the aerospace industry with our drones. The other one I will not talk about yet, but it is a substantive acquisition that will give us a very unique competitive advantage as we plan on making Bayou, and I've said this before, the Boeing of Group 2 and Type 3 drones that are autonomous. We looked at our customers will look to us for those type of technologies. And we're excited to talk about more of those in the next few months. Overseas battery production began in Q2, or is beginning in Q2, sorry, capable of producing 100,000 units of AX-class solid-state batteries per month. I'll give you an example of that. QuantumScape recently, a competitor in the solid-state battery industry, and they have a great product, so I don't want to minimize the company or what they've done, because they've done some amazing things. But they're talking about building a pilot factory of producing 100,000 units a year. We're currently capable of producing 100,000 units per month. Now, our goal is to bring this stateside. Costs go down for us because shipping is very expensive, and it is also a heavy product. So we have we've been working, since December to identify where we want to build a solid-state battery factory that is capable of handling the type of growth that we anticipate from our, whether it be EV industry, the ESS industry, whatever it may be. We want to be able to accommodate that growth. So we've selected 4 cities right now: Phoenix, Indianapolis, Tucson, and Houston, and we expect to have that consideration done by the end of Q3, where we're going to build it. From there, to keep all expectations appropriate, it takes at least a year and a half to build a factory. So understand that our U.S.-based production is going to take a while to get going. But the decision on which city to build it in, I've been talking with capital partners on how to do that, and in potential customers investing into that, is going to come down to probably one of those 4 cities. Bioproduction facility was completed in Q1 of 2022. Let me give you an example. When we inherited the technology for Impossible Aerospace, it was very refined, very technical, and ready to be produced on a much larger scale. But we recognized some of the technology deficits it had, and so we went into R&D development of US2 that accomplished some of the shortcomings of US1. While there's not a lot, we did want to feel that there were things that we needed to do. But when we inherited Bayou, a very different company geared towards the medical delivery in very rural areas. Amazing airframe, but it was the components in that airframe were largely Chinese-based, and we realized that we're not going to grab many U.S.-based customers or NATO or European customers using Chinese components. So we made the decision in July of last year to rid that airframe and the US2 airframe of anything that's Chinese, at least that would be of major components that would be banned from the United States government. So we did that. We accomplished that. We tasked TK with that, and he's done an amazing job at doing that. But he also was tasked at building an assembly line. And while we talk about building 10 G1s per month, they are expensive airframes, $200,000 to $250,000 a piece. They, depending on what goes into them, 10 doesn't sound like a lot. From where we were before, producing 1 maybe every other month, this is a big escalation in production capabilities. As new customers come online, we will be able to mimic that assembly line very quickly to escalate the increased production of G1s. US2 is currently still being prototyped. It is designed to completely run on either solid-state batteries or graphene lithium batteries. And the goal is to, like I talked about, solve the problems that other companies haven't been able to solve using drones. And the solid-state batteries do a lot of things, and so does graphene. And the main thing is energy density, how long it can fly, and how quickly it can charge. Drone sales have begun and are expected to increase quarter by quarter. We did a press release earlier this week on really our first sale under our new management, our new ownership of our drone companies. It is to a pretty impressive customer. You guys don't know much about ENSCO. They have a large industry subjects in aerospace, rail, governmental work, and we hope to partner with them more as the years go on. So that's we were happy to announce that to you guys, and note that you can expect more drone sales coming over the next few quarters as well. R&D development will increase over 300% in 2022. Now, for some of you realize that's an expense that hits our P&L. It's an important expense. All these acquisitions that we invested heavily in 2021 and 2022 require us to basically take that investment and reinvest back into it to keep on being leaders. But as I showed you, the market potential is absolutely enormous, and we feel that our technology, while very robust as it speaks today, will need continuous investment. So we're excited about the R&D. I think it shows that we're a company ready to take on the challenge of being a leader in each of these segments. We also, and I'm excited to say this, this is absolutely no exaggeration, we have 81 patents to be filed in 2022 and 2023, mainly around our battery technology, but also around our drone technology and how it is deployed, in several economic markets. So go a little bit into 2022 revenue guidance. We talked a little bit about that earlier. Contract manufacturing. If you looked at that industry, especially in the nutraceutical side alone, you're talking about an industry that's $490+ million, growing to $900 and some odd million. We're projecting a very small amount of that, $36 million, for alt labs and quality circuit assembly. However, 2022 is the year of reinvestment and refocusing on our subsidiaries. We're laying that foundation again to even grow larger in the years to come. So expect $36 million roughly for those two subsidiaries or contract manufacturing. Our defense contracting company, again, 2022, we're projecting about $14 million for thermodynamics. There is an enormous amount of backlog. That revenue number could jump increasingly higher. However, that's a very safe number to project for that company. Aerospace, we're projecting $4.2 million for the two companies of Identified Technologies and Value Aerospace. And I'll add that that number is fairly conservative. There are a few pending, negotiations that could jump that number up dramatically, but they're not firm yet. So we're talking about numbers that we feel that are very solid for 2022. Technology, and this is really, if you look at the landscape of what we've done, RCA and ElecJet. RCA Commercial is, a company that has technology in hospitality and healthcare, and we are very keenly reinvesting dollars into that company so they can grow exponentially. But for 2022, between the two of them, ElecJet and RCA Commercial, and this really excludes any battery sales for ElecJet, we're looking at $52 million. Construction services. Construction services has been a rough sector for us for 2022, and will represent a large amount of our loss that occurred in 2021. But expected to hover around $16 million for the year, with margins improving. We really won't see them come out of the weathered storm until about Q3 of this year. But if they get back to what they were doing in early 2020 and 19, the margins which they're projecting back to, this will be a nice profitable industry segment for us. All in all, we're projecting about $122 million for the year, as we discussed, and it could grow higher. So we have a very positive attitude of where we're headed for 2022. The Q&A, I'm going to open this up. Over the last 2 to 3 weeks, we received several questions. We tried to congeal them down to repetitive questions. And so Shannon, maybe you can kind of read them off, and then I'll discuss them individually. So
first, thank you everyone for submitting questions. We appreciate that. One of the big ones: why have there been no drone sales?
Very good question. A painful question for management to really address, publicly. And let me tell you why we've been a little bit more quiet about it. We didn't want to broadcast to all of our competitors all of the changes that we were making at the corporate level of ridding all the Chinese parts, having to create a production line, those type of things. And so when we made the decision to hire TK, we pulled back. Right before we hired TK, I actually said that we were going to be delivering a drone in Q3, a G1. The problem with that, as soon as we hired TK, we realized that we would be building a drone that had these components that really weren't up to par, and looking at their use case, they really needed to wait. We feel that customer will come back. I don't believe they've repurchased a different drone, so that's something we can anticipate in 2022. But the main purpose was we really wanted to make sure that we had released a drone into an ecosystem that was very well understood from a supply chain standpoint, so that as we get into larger sales, we knew that we could state that we are not only proudly manufactured in the United States, but the components that went into the manufacturing were sourced either from the United States or friendly parties in it. So that being said, that is why you've seen no drone sales in 2021 and are now just starting to see those.
What happened to the world record?
A common question, and when we announced doing that, we were looking at going to Equatorial Guinea. We had clearance from the governmental parties to do that. What we encountered shortly after there was a governmental change that changed our calculus from a security standpoint, but also just the ability to go there. So the world record is something that has taken a low priority from our standpoint when we looked at getting our Chinese components out and our U.S.-based components into our airframes. But it is still something that we're going to be doing over I can't give you a date, but the reality is it's something that's on the road. We know our frame can do it, but when you look at the priority list of what we're trying to do, it's certainly something that's lower on the list. So TK and I have been discussing locations for it. When time is ready, we'll certainly look at getting that out and letting our shareholders know. It's not that we don't want to do it. We know our airframes can do it. It just, frankly, from a priority list, has been low.
Any guidance on Q4 21 earnings?
Well, I would love to give you that guidance. Our report should be out next week, and you'll be able to see that. But I will say this, Q4 was rough, just like Q3, Q2, and Q1 of last year. Supply chain has been exacerbated. We pushed a lot of revenue into 2022. Some of that revenue we pushed off from 21 won't even hit till Q3. That's how backed up the supply chain is. So I would love to tell you that it's a fantastic quarter, but it's not. It's a very rough quarter. But I can tell you 2022 is already seeing good changes that I think when we release Q1, you'll see that progressive change. So.
Is there going to be another offering?
Another offering. Well, you will notice that we filed an ATM, off of our shelf registration statement. The ATM, and for those who have asked, we have not been selling, the company has not been selling shares off of the ATM. And we can't do that until we're out of our blackout period, which will be post us filing our 10K. But let me backtrack. Some shareholders have expressed that we don't carry enough cash on hand. But as I pointed out in a few slides back, we have roughly $44 million in current assets, and that translates from cash and AR and inventory. Those later two, AR and inventory, regularly turn to cash fairly quickly. So there isn't a really huge pressing need to tap the ATM. It's there because if we need to do things on the R&D level, or if we do something that requires us to, make a larger investment into something, we want that there so that we can access cash in the capital markets. Is there another offering, such as the $24 million we raised in November or the $50 million we raised last February? There is nothing planned as of this moment, but as things come up and opportunities, we may be doing it. And we're effectively doing that for the benefit of the company. And we're doing that to add assets. And we do regularly measure, what is our cost of equity, which is what's the share price at, how dilutive is it, versus the cost of debt. Those are meaningful discussions that the CFO and our accounting team and even the board of directors have on a regular basis. So understand we're taking it seriously, and we're not out there just raising capital just to raise capital. We're raising capital because it has a purpose, okay?
What does an ATM mean?
Well, it's funny. I've had a few shareholders say, is that an ATM like the cash machine? I have to laugh, although it functions a little bit like that. It means at the market. And at the market is basically our investment bank can go into the market at the time that day and say, okay, we're going to sell $100,000 worth of shares. And they do that. Mind you, they do that to, they're not in any rush. So there's not a liquidation event that goes on that should drive share price down. It's in conjunction with what the market is functioning at for that day. So it's very strategic. We control it. And I think that it should have if the company is selling shares into the market, at that point, it should have very minimal impact to any share price.
What is Alpine 4 going to do to mitigate the losses from the construction services companies?
A very good question. Jeff Hale, my COO, and I have been actively involved in that subset for over a year and a half now, coming off I would say consistently profitable quarters and years prior to that. What we saw last year was really the losses that we saw last year were from the run-up of metal prices. and not having escalation clauses in contracts. And people ask, well, why don't you have those? Well, in the industries we serve in those subsets, you are not allowed to have those from the GA, the general contractor level and the customer level. There are certain market segments in construction that do have those, but in our industry, we're not allowed to. So what we've done is we've gone through what's called a profit improvement analysis with all of our subsidiaries and the management team there to properly adjust the future for our pricing and how we price our cost estimate, not only from a labor perspective, but our materials perspective. And what that's allowed us to do is get ahead of the game. The nice thing is we do have a large protection, if you will, in that pricing structure, so that allows us to mitigate anything in the future. The other side of that too is, although pricing and sheet metal is going back up and we're constantly adjusting for that, as things come down, we should be able to recoup some of the losses we incurred last year because the pricing has gone down and we're able to still justify that cost structure to our customer base. So, it's been a very active, proactive, but it does take time. Q1 will, for the construction or services industry at least, will still be a loss. And so and I don't see that changing till Q3, but they have been working diligently with the corporate team to make sure that we're doing everything possible. And I expect by the end of Q4, that normalized margins in that industry will have returned, and we should start to see a very profitable subset for us.
Where's the battery factory going to be?
A very common question. Like we said in our prior slide, we've narrowed that selection city down to Phoenix, Tucson, Indianapolis, and Houston. And we expect to be making a decision based on discussions with the municipalities and at the state level of how much assistance they're looking at giving us to do that. But we are very serious about it and hope to have a decision by the end of Q3.
How are supply chain issues affecting the subsidiaries?
Well, talk about a large impact to our financial statements and our subsidiaries. The good news is we were well capitalized to weather this storm, okay? Something that a lot of our competitors simply had to fold up shop. Even some of our customers, due to supply chain issues, had to fold. But we were very well financially capable of handling the supply chain issues. If we looked at our inventory, it grew 3.6 million. No, equipment. It grew dramatically in 2021, and that was us buying a lot of inventory in bulk and ahead of it to ward off potential supply chain issues. That being said, it still has affected us, and it's going to affect us all through 2022. While some segments are getting better, I got to tell you, the war in Ukraine right now is affecting things. We're seeing that, especially on the food side of things. Ukraine is one of the largest producers of beta carotene, which is, a rather decent size of our product in our nutraceutical side of things. So we've done things to be strategic in buying things, but that I would expect supply chain issues going on globally. This isn't just an Alpine 4 level, globally, till the end of 2022 and possibly into 2023. What I am seeing is there are slight easements in some areas that I hope will help us over the next few quarters.
Can you share more with us about Global Autonomous Corporation, GAC?
Global Autonomous Corporation really was the brainchild of a select few executives and employees at Alpine 4, and it stemmed from really the acquisition of Bayou and Impossible. And what we realized, and I talked a little bit about this at the Contact Summit with Guy Adami from CNBC, but what we accomplished over the last year is really some of our R&D has gone into development of scheduling software and some other route scheduling software and with avionics autopilot software. But the goal of Global Autonomous is to solve the problem that many companies and large companies such as Walmart and potentially and Amazon, and they failed at it because the technology wasn't there. So Global Autonomous is an amalgamation of our solid-state batteries going into our I would say patent-protected drones, and it allows for some very key components that other companies can't or haven't been able to use. And what that is the electrification of flight will allow Global Autonomous to do several things that competitors haven't. Global Autonomous is a company that is going to use a mesh network of kiosk stations down around a urban area to be able to fly drones to land on it and deliver a package and then deliver that autonomously. If you look at some of our partnership relationships, even Drone Deck, we have been actively working with them to help solidify things within the GAC network. But the reality is this, that is a huge opportunity for this company, using some of our most robust technologies to allow a company to solve a solution in a $100 billion industry, and that will be a very pivotal investment for this company over the next 1, 2, 5, and 20 years. And what you're going to see from that, and I hope this goes to show you how much we think about our shareholders. Global Autonomous was designed not only to solve that problem, but to be spun out into its own public entity. And shareholders at some point, and we don't know the ratio, will receive a dividend in the form of a share in that company. As it gets out to the NASDAQ or the New York Stock Exchange or whatever we spin that out to, there is going to be a dividend paid to all of our shareholders. And I think that shows how we are progressively looking at ways to reward our shareholders. And it's an exciting company to be in. And so while it's too new to really talk about a lot of things going on, I would expect over the next year to get a lot more information on how the company is going to proceed to operate, what are our key partners that we're working with, and how that structure, if it's going to be, or when it's going to be spun out, will be spun out, and you guys will get more information on that. Okay, so that is, I'll leave that back up. That is it for this meeting. I want to thank every single one of you for attending. It looks like we have roughly 500 participants participating in today's shareholder meeting. I hope that you see what we see. This is a very exciting time to be a part of Alpine 4. Never in our history have had this much potential in our ecosystem. And we plan on, I said this a couple times, but we're just getting started. The opportunity over the next 5 years, 20 years is enormous for this company. The right ingredients are present, the talent exists, the people exist, the opportunity exists, and we plan on seizing the moment. So from all of us at Alpine 4, I want to say thank you to all of you for your support. You guys have been amazing. And so let's have a great 2023. Let's have an even better great 2022, a fantastic 2023, and we really appreciate it, you guys as shareholders. And we thank you very much.